Everybody does. So now...
So on the 18th, Goldman said that they see less downside to $45 a barrel.
Yeah.
It was the 18th, so yeah, maybe switch over that guy's site and grab some put.
Yeah. Dennis said they've been all over the place on it.
Yeah, so they just cut their upside possibility and their downside possibility both. That was really nice. Let's try to find it.
I like to party. Look at that. Everybody. Dan, what are you fucking doing? Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything that you need to start your trading day. Good morning, traders and investors, and welcome to this Tuesday edition of Benzinga's PreMarket Prep, brought to you by Thinkorswim and TD Ameritrade. I'm Spencer Israel, As always, joined by Joel Elconin and Dennis Dick. On today's show, we've got Valiant in the news with the Department of Justice. We got Alibaba in the news with the SEC for accounting issues. We got Coach Pfizer doing their earnings thing. We've got Nick Sheen on at 8:35 to talk about what options plays he's making. So we got a pretty good show for you guys today. But before we do that, we'll go to Joel. He'll give us a little bit of roundup on the S&Ps, oil, and gold, and how they did overnight. Joel, take it away.
We got some action here in the market. The S&Ps got within a buck of yesterday's high. This is called 2130, your resistance on the upside. The close 2120 even. We haven't hit that. Keep an eye on that as support. Yesterday's low down at 1475. Crude got a pop over 47, but some negative comments out of Goldman Sachs has it back on the lows. New lows on the move here, 46.56. That's the low. Nothing great until the 45 area, but don't think we'll see that today. And gold and silver getting a boost, waking out of their doldrums though. So we'll see. We'll see if they can hold $18 in silver, and gold headed towards 1300. 802 on we really can't. Well, I guess turnaround Tuesday. I guess we were down a little bit yesterday.
We're not up very much here now, though. Joel, turnaround Tuesday is fading fast. S&P futures were nicely up, and now we're only up here a couple of points. I don't know. We're leaking.
Yeah, Bank of Japan continuing with their monetary policy, which means continued free money and easing. That could probably give a little bit of a boost to gold and silver here, but I'm glad we're coming back in near the close here. Maybe a chance to get in a little bit cheaper on some issues.
Let's jump into some individual stocks because there's some movers here this morning. The chat's already talking about it. Alibaba is getting the beats here this morning. It's down $2 here now. Counting issues here. This is something that was the concerns there probably about a year ago, and it really started to hit the stock down, especially when we got down under $60 here. We haven't heard about this for a while, but now there's some rumors here of obviously some investigations here into accounting practices. Spencer, what are the details?
You basically got it right there. The SEC is working with whistleblowers, including a high-up official. This is according to the New York Post this morning.
So looking here, Alibaba trading down 2 points. And you know what the issue here, like when you get into accounting stuff, man, this isn't something, this is just coming up here again for the first time in a while. And often this isn't something that just blows off in one day. So, maybe it's just, a one-off thing, but I don't know. From my experience here, when you start talking accounting again, it usually the sellers will materialize for more than one day. So I'm not jumping in here and just buying Alibaba here today, especially after the run and had July, August, September. I mean, back in July, this was a $72 stock. Now it's a $100 stock here. It's the whole classic support becomes resistance at 105. You can see if you look at that level, it was a little bit of resistance 105. It broke out in mid-September. Then it was finding support at 105. Then it broke down through the level, came up 3-4 times trying to get back up at 105. Couldn't do it, failed there. Now it's drifted down for 4 days. Now it gets accounting here as well. I see lots of overhead supply. I see some fundamental concerns, obviously, with the accounting stuff that they're talking about. So I see no reason to just go out here and buy this thing today.
Pre-market low comes in at 99.40. We'll keep an eye on that. But basis the daily charts, level I'm going to be looking at on the downside is 99 even. You bounced there hard off that level on October 13th, and that was
gotta hold that.
Yeah, and then there was also a low at 98.84. So there's your number on the downside. On the upside, I'm sure a lot of people would love to see the mark there at 101.60. 101.60.
A lot of sellers.
Yep. There you go. They'd like to get out there 101.69. That was a close. That was 17 cents off the low.
I think if this doesn't hold that 99 level that Joel's talking about, I think it could see 95 in a pretty big hurry there. So that's something to keep in mind too. Might bounce their first time, but when they take out these levels, we know sometimes selling continues. Just look at the chart of CMG, that huge level that was at 385, and we took that out, and boom, we were at 362 in a matter of hours. And that's what can happen when you take out these big levels. And not that that's a big level like Chipotle, but there's just not much else in there. So there's people looking probably to that number and takes that out, not a lot below.
Yeah, I was even thinking of the 350 weekly puts in that CMG yesterday, and I'm like, are you
New lows again
crazy? Yeah,
yesterday.
I know, new lows. And look at that, just one thing on the upside, and I think Yayo or somebody asked me about it at the end of the session. I said, well, there's a lot of resistance there at 373. Now you got a triple top there between 72.5 and 73.45. So you know where someone's trying to wiggle out of some stock there. 373, I'm never touching it again until it gets above there.
Let's go back just talking Baba. We should do the technicals on Yahoo. We know Yahoo just seems to follow it. And here we are with Yahoo this morning trading down about 1.76% here too, ever since they've, officially, well, they haven't officially spun off their Yahoo businesses there to Verizon, but it's still in the works, obviously. They've just basically become a Alibaba tracking stock here now, and it pretty much seems to move percentages for percentages. So we got Baba trading down 1.87%. We got Yahoo this morning trading down 1.76% here. Just quick technical, one number here, Joel, on
Wow,
Yahoo.
one number here. Whew, whew, 41 bucks. That's what I'll
I
say.
like it.
But we've taken it out, so that's
I
now going
like
to
it
be
for a sell.
yes. Gap time, gap to fill, folks, all the way down to 39.98. So 40.41 could be your range today there in Yahoo.
Yeah, you got that gap below there too. Not much in here either. So keep an eye on Baba if you are trading Yahoo once again. And then last night, just after the bell, L Brands gives us a warning here, and this stock is getting taken behind the woodshed and beaten here this morning, down $5 or down 7%. I'm having a little bit of deja vu because if you go out to the weeklies and you take a look, back earlier this year, it was Al Brands that was the first retailer, one of those mall retailers, to warn, and then that started the big slide in all the retail stocks. I don't know if that's going to happen here again, but sometimes history can repeat itself. So I'd be very cautious on almost any retailer here today with the L Brands warning. But Spencer, give us the details on what L Brands said last night to knock 7% off the market cap here this morning.
Well, first, that was in May, right? That happened the last time.
I think so.
Okay, yeah, I
Yeah,
got
you
it.
can see the big cascade if you look on the charts when it went from basically $80 down to 69 just very
Yeah,
quickly there.
yeah.
That's the warning time.
I had it on May 7th. I wanted to make sure I was looking at the right date. Okay, Elbrand says its Q3 earnings will come in at around $40 per share, which is at the low end of the previous guidance, which they said would be 40 to 45 cents per share. The street was looking for 46 cents. Management also said October comps will be up 1% as a 2% decline in Victoria's Secret will be offset by a 6% surge at Bath and Body Works. And that's basically it, though, that the EPS coming at the very low end of the range.
Scary here, Joel. You start looking at this and, just quietly here, Al
Six.
Brands, which was very loved at the end of 2015, multiple times kissing up near $100. We talk about those big whole psychological numbers, and that was it. And I'm looking out to the monthlies here, and, then we had the big fall with retail, and it had started coming back. And if you just wanted to do the quick math, on
There
the
it is.
50%,
Yep.
these work. These 50% retracements works. Like our technical analysis, we try to keep it as simple as we can. That's why me and Joel both really like the 50%. We're looking at the monthly chart here. We can see how Albrand's got up to 100, went all the way down to 60. When it comes back, what level does it get to? $80 it fails at, and that's the 50%. What is happening here now? It's starting to continue to move down. We're at 67.15 here now. I don't know if we're going back to that 60, but it's a little bit scary here for shareholders this morning.
Yeah, and just quickly, when you have those 50% retracements, you like to see a level coincide with it. Your May high was 80.20. Your August high was 79.67, flanked by that $80 psychological level, so that's important. I mean, it's hard to find support in here. I mean, it really is. I mean, you look at I'll give you the pre-market low, and you can use that as one parameter, but it's 66.75, and I mean, you are just getting into an area where there's not a lot. I will say a little bit, maybe if I had to stick a bid out there to cover short or something, I would look just below this area. What's the pre-market low? 66.75. The only reason I mentioned that is you had 1, 2, 3, 4, 5 lows at the 66.50 area. So this one, I'm a little bit more of a buyer at 66.50, especially if I was short this thing. Not enough to make me do a wager, Dennis, that will close above 65.
Yeah, well, it's, been hit here already pretty hard, 6 points, or 6% when you're knocking it off. So I don't like shorting stocks. We call it shorting in the hole, and I'm not shorting it when it's down 6%. So, but I don't know if I'm jumping out here buying either. So I'm kind of on board with you. So I don't think we're gonna have a wager here. Let's talk, some sympathy plays here. You can go almost any of these mall retailers, and they might have some sympathy moves with it. But if I'm thinking more direct, you could think like an American Eagle Outfitter. You could think like an Abercrombie and Fitch, which is ANF. The Gap, GPS, often will have a sympathy move here. If we look at the Gap, hasn't none of these stocks have traded much really because we only had an after-hours session. But GPS was trading down about 60 cents last night on this news. I want to focus on that one because it's been a good run up for the Gap, and I think this might cue some profit taking for a lot of people who had bought this stock in the lower 20s and now looking at up here at 27 to get an L brands warning. I think you'll see some profit taking in GPS here today, and that could knock it back down in the 26 handle.
I knew you were going to go to that one, your old go-to stock that you don't
The one I
like.
eternally hate.
Yeah, so I've been thinking of shortening it since it had to gap up, and I'm glad I did it. Now you're almost filling a gap here from March.
We always say gap a lot when we talk about the gap. Do you
It
notice that?
does.
All we do is talk about gaps when we're doing technicals on the gap.
Do you think we're going to go into a little retail hell here?
I
Like
don't know, man. That's what I'm concerned about because we haven't had retail hell here for a while. And there's been some pretty good runs in some of these retail stocks, besides Macy's, which Macy's has been a perennial underperformer. I mean, you look at Nordstrom, JWN, the lows were 35 back in June, $55. Kohl's has come significantly off its lows, which were in the lower 30s, and it's trading up to $44. The Gap has really run up here. And now all of a sudden you get a profit warning from, one of the retailers that is pretty widely followed, Al Brands, and usually one of the better of breeds. That scares me to own any retail stocks here, especially on some of these that have had a pretty good runs.
And you got, what do you have? You have Cyber Friday, or is that what they call the day after Thanksgiving? You got
Cyber Monday.
Cyber Monday, and the day after Thanksgiving. You got a lot of, maybe determinative of what kind of holiday season we're going to have here. And it's not too early to start talking about it because we're at November 1st here. But watch out in these retailers. You have
Yeah.
a Catalyst and L Brands.
Yeah, pre-market prep warning you here this morning on the retail sector. Could be weak here off this L Brands news. Okay, we got to jump back into the earnings parade here because there has been a ton of earnings reports here and we haven't touched on them yet. Just going here from this morning, the big one everybody's talking about here is Pfizer. The fall continues in PFE here. Joel just can't seem to catch a bid when everybody had to own it back in July. Had the failed breakout there above 37, and it has been straight down ever since. And now you start thinking about the big psychological $30 level.
How can you not? I mean, after that kind of run that it had. And first, I'll give you the pre-market low 30.50. Got a nice bounce up to 31.20. So expect some volatility here in Pfizer today. I mean, down at 30.50, that puts it down over a buck. So that got a little overdone. Dennis, I think the low for the day is in Pfizer. I don't think we see 30.50.
I'm not going to make you a bet on that one, but I'm not all that confident that the low of the day is in. So no bet from me. I'm kind of sit on hands trade, at least with Joel, because Joel's been so hot with those lunches as of late, and I just can't seem to own them. I don't want to own him any more lunches here. I pay one off, and then I make a bet the next day, and I owe it right back. So Joel's too hot right now to bet against, but that being said, I'm not totally confident the low is in. But one thing, this has going for it, and I'll say this, and let's get the numbers from Spencer, because, we did the technicals here. Let's get some fundamentals in here. What were the numbers from Pfizer? And then I can make maybe a better trading decision.
61-cent EPS missed by a penny. Revenue 13.05. That was in line with the estimate. Fiscal year EPS $2.38 to $2.43. 2.46 was the estimate, so missing there. Rev full year fiscal year guidance 52 billion to 53 billion. 53 was the estimate there, so low end of the range on the guidance both times.
Nothing great in that report. The only thing it would have going for it is that it had been hit so hard going into the report. I don't think nobody was expecting them to blow it away here. Obviously, the stock was down 20% in the last 3 months going ahead of the report here. I don't think the numbers are terrible, but I don't think they're great either. So I'm still sitting on my hands here. No trading decision for me on this one, except down at $30. I think if it got down to that level, I don't know if it's going to do it today, but if it did, I think sometimes those big hole psychological numbers, the first time they get down there, are often bounced bounce levels.
Yeah, just one quick note. You know what the driver was for this rally in June? This from 33 and a half to 37.39. You know what that was all off the heels of?
No.
The Allergan deal not going through.
Oh, they were pumping that because they
Yeah.
were, how they hit acquirers and all of a sudden they're not the acquirers, so let's buy Pfizer because they've got all this money that they're not wasting on Allergan. Where is Allergan? We haven't looked at it for a while. AGN. Whoa, whoa, ugly, ugly, ugly. And this is supposed to be the beautiful stock, isn't it? The Botox that makes it beautiful. Well, that stock chart is ugly here. Last 5 days.
Yeah.
230. I guess they've been hitting every biotech stock, every pharma stock here, but man, poster child for what's happened to biotech and pharma.
195.50. That was your low. I think that was back in May when there were dealings going on with Pfizer still. I mean, that's ugly. I don't even know. Maybe get your bid out at 200 today. I'm not sure how it's trading in the pre-market. So before I say that, 208.15, that's your pre-market low. But I tell you, look here, look to the right, and you see, the 209 close. Look to the left, and you see one low just below that, then 195 and a half.
Yep.
But could start to thicken up. A lot of this is, maybe election worries, perhaps, is with Hillary coming in. I mean, boys, these biotechs sure aren't acting.
They're
like,
ugly.
yeah.
They're all just ugly. And this one, 195, you're right. You've come all the way down here to 208. Maybe that's where we're going to go test. So that's the big level on the downside. That's still another 13 points lower than here. So I'm sitting on my hands on this one here too. Like Nick Shaheen, who we're going to have on in 20 minutes here. And I always get his saying wrong here. So maybe he'll correct me when he comes back on 8:35. But on the upside, he always says it's like too hot to chase, but too high to short, or too high to chase, too hot to short. I get it all mixed up.
Too high to chase, too hot to short.
There you go. So on the downside, what do you say? Too weak to chase, but I don't. Too low to buy.
I don't know if he has a down.
I messed all that up here. We got to get Nick to tell us what he says on the downside. But it's a good saying.
All right.
Okay, a couple other ones here that reported. Coach, COH here. We've got a retailer that is actually trading higher here this morning. Coach is up a little bit here. Spencer, give us the details.
45 cents. That was the estimate. Revenues of 1.04 versus 1.07 billion there. So slight miss. They expect their fiscal year 2017 revenue to increase by low to mid single digits.
Well, Joel, give us some technicals here. The stock has been weak. Another one that's been weak forever. Just when you look at Coach and you go out to the monthlies, you think about the stock back in 2012. It used to be an $80 stock. It's now $35. You look at it here, though, it's found some consolidation. It's found a little bit of support here, but it's up, 60 cents in the pre-market. But they're not coming here buying it with two hands.
Prove it to me. Prove it to me that this stock can get over the series of 5 highs, just from 37 even to 37 and a quarter. Show me that you can get above there and hold there. If not, you have to respect that as major resistance.
That's, a great trading tip there, too, for so many stocks. We talk about setups and we talk about, this is looking like it's going to break out. Well, you know what Tommy Lackey was saying last week is, why not wait for it to break out? Show it to me, prove it to me before, making the call ahead of time there. Even on CMG, I mean, you could have said, when we were saying it on the show, we think this is going to be the time that's going to break down through here, and it was. But, you could have waited till you started 382, 381, and then start shorting it. Prove it to you. And, I think some of your best traders wait for that proof as opposed to, just speculating a little bit more on, is it going to break the level? That's one thing to consider here is wait for it to prove it to me. Show it to me.
Yeah, it's nice to have a head start maybe on a little bit of the piece, and then you get to confirmation and you go. It's hard to. I mean, that day that it did go through there. I mean, if you would have shorted it at 385 area, you could have lost money like a dozen times. So that one time when you had the driver, when you had the earnings, you just kind of had to close your eyes and hold your nose and just go right into it, because it did not even give you a chance to fill the gap.
Dr. J wants to know about Tesoro earnings. TSO, they did report here last night. And TSO, the refiners who everybody hated back in the summer, they're starting to get some love here again, and don't call it a comeback, but Tesoro, which bottomed and everybody threw it out there back in July when it got down to 69 bucks, is now an $87 stock here again. Spencer, give us the details from the report, and Joel, jump into the technicals.
Oh boy, tough one.
Q3 EPS from continuing operations a buck 43. That was in line. Sales of 6.544 versus 7.743 billion dollars in the same quarter last year. So a bit of a miss there.
Joel, what are you thinking on this one? Give us some technical thoughts here.
Well,
Right,
what's this print here? I got to see the print here up at
100
80.
shares only.
Okay.
100 shares, 87.
Man, if it was before the market open, I'd say, man, if this thing goes through 85, you got to have your barrels loaded here because this is a daily chart breaking out a long-term consolidation. But now that you've breaked out above 85, now you're running into a bunch of highs at 87.50. You had 4 highs in that area, so I'll have that as minor resistant. But coming back on the downside, I'd love to see this get to the old support or old resistance, which is new support.
I like it because my Valero stock, which, this is my contrarian investing. I'm not a contrarian trader, but I've always been a contrarian investor. And Valero was going down, 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 down. Everybody hated it. And I said multiple times on the show, I've bought some for my investment portfolio because these things do often start to turn around. I love the dividend. It was over 4% when I was buying it down in the lower 50s. Now it's $61, or actually, if we just go to, yeah, it's $61 this morning. It's trading up here as well.
Yeah.
VLO, yeah, up 3%. Don't call it a comeback, but the dividend's now only 3.92%. And Valero's turned it around here. Everybody hated it when it got down to 47, 48 bucks, but these things do turn a lot of times. And, sometimes, contrarian investing can work. Again, it's difficult contrarian trading environment, but trading and investing are two different animals. I've always had a lot of luck as a contrarian investor, not so much as a contrarian trader. So I would say I'm more of a momentum trader, but a more contrarian investor. And, I'm happy I bought my Valero when everybody hated it back in July. And obviously now I'm looking at it at $61, and it's looking a lot better.
You holding on?
I'm holding on here. Yeah, I like the dividend here still. I think some of the refiners, and obviously you got to give yourself some targets there too. And when I was coming in here and buying in the lower 50s, I was thinking eventually I might see this as a $70 stock here again. Now that's a long ways away from here right now, but that's why it's in my investment portfolio, and I try not to look at, and that's how you can turn some small winners into big winners by not looking at them in my investment portfolio.
That's the best way to do it. With the Valero, actually, when the Tesoro earnings came up, I looked at the Valero, Dennis, because I knew you were in that. Nice breakout above 60 here. Not much between, 60 and just above 62. But one again, maybe wait for the pullback to the $60 area, for a little area of support. And this was a favorite of Ron and Sana. Remember, we had him on the show a while back. This is one of the stocks that he really liked. Nice comeback, Dennis. Way to ride it out.
Still looking here at the earnings parade. Did we get the Kellogg numbers here yet? Because you know how I like my food stocks there, and I do see Kellogg's. This is super light volume. Only 225 shares have traded, but it is trading up here this morning. Spencer, got the Kellogg numbers?
$1 versus 87 cents. 3.27 billion versus 3.28 fiscal year EPS. They see from $4.11 to $4.18. 416. Actually, they increased it. It's from 411 to 418. Now it's 416 to 423. So they increased their fiscal year EPS, beat on the Q3 EPS, and a slight miss on the revs.
So a question I get, quite a bit here as of late because the food stocks have shown some weaknesses. How do you like the food stocks? Do you see some value in here now? I mean, they're getting more value than they did, but these things were so inflated back in June and July when Kellogg's took off from 76 to 86. Remember, you can rewind and look at the tapes there, and we're like, man, this is so uncharacteristic of all of these stocks. It's going to end. It's probably going to end sooner than later. And when we look at these stocks 3 or 6 months from now, I think they're all lower. And, that has happened here. Campbell's Soup has really fallen off from its highs, got back up to $67. It's now down at 54. Obviously, Kellogg's, which we were just talking about here, up at 87. It's down here at 75. You can look at GIS. Same story. Even Tyson Foods, me and Joel, and Tyson still held up pretty well considering because me and Joel hated it at 65, went to 75. Now it's at 70. So we're still, I guess, wrong on the Tyson Foods side here. But, a lot of these food stocks have had pretty incredible runs. And you look at it here and they've pulled back. They've pulled back significantly here. I'm just just not sure that they pulled back. I'm not sure that they pulled back to where I find value in these things yet, because a lot of these food stocks are still trading with multiples that are above the market, and they're not growing earnings, and that's not, an investing sign for me.
$74. Holy mackerel. Look at that. You hit that 5, 6 days in a row. This was back in October. That was the same area that held in May. It also held up in March. Dipped below it a little bit in February. So, man, if you want to wait and get it on the cheap here, maybe it's $74 area. There's no way I'm buying
Take a
this
level.
thing up at 77. Pre-market high at 77.38. Just the fact that this thing is consolidated, it's had its breakdown, it consolidated a major support level. Man, I'd like to try and buy it on the cheap. Maybe get into yesterday's range, folks. Sometimes that works out pretty well if you wait for something to back up into yesterday's range, and that would come in yesterday's high, not too far away from there, 75.15. So if you want to, get in there, maybe lower 75s, maybe you'll get a shot at it.
Okay, let's just move away from the earnings parade for a minute here, because we got a lot of other news in a lot of different ways. And actually, this is kind of spin-off Tuesday here, which is interesting here. You got two major companies that are widely followed, spinning off some of their operations here. Yum, which has been talked about forever, has officially spun off Yum China here this morning. So if you're looking at Yum, you're wondering why it's trading down 20 points. It is not trading down that. They've actually spun off YUMC. First day trading here for YUMC. I believe, and I don't know actually the ratio. Actually, I think it is. I think you get one stock. I think you're getting one share. Is it? You're getting one share? Yeah. I think you're getting one share for every Yum. So you're getting one YUMC for every Yum share that you had as of the close yesterday. So you add up the two prices, and it usually comes into yesterday's closing price, which is about right. Closing at 24.24. Has not traded here today, YUMC, and Yum's trading down here at 62 and a quarter. So it's one and one.
And I'm not going to make any comments on it because I hate when this stuff happens. I don't see what material value there is. I mean, you still have one company. Now I will spend the next 6 months every time I look at Yum, I'll have to look at the other one, add the two together, and figure out. So I same thing with Alcoa. I mean, I
Yeah,
just no.
and that's the other spin-off here today. Before you jump in, I'll just give it to you. AA is spinning off ARNC here, and this is 1 for 3. So basically, for every one share you own of Alcoa, and I'm an Alcoa shareholder here still, you're getting three, or you're getting no, for every 3 shares of Alcoa you have, you're getting 1 share of ARNC. And ARNC, Arconic, has traded at $25 here this morning, which seems crazy because it actually closed on the spinoff price of 21.57. So that's up 15%. So I'm not sure anybody's going to be jumping here and buying that thing at $25 here this morning. So you're seeing, actually, you saw 28.87 print here too, which is just that's the thing. These things are illiquid in the pre-market, and it's only traded here a few shares here this morning. So I do think it's going to come back in.
I have no idea on this one, and it's very few, not very often I don't have an opinion on something.
One thing I can say is I do trade the spinoffs there, and they typically do. You often will see this company that's spinning it off sometimes open a little bit too high, because sometimes there's GTC orders in there. There's other things that might be holding the stock up just for the opening print. So a lot of times you'll see the stock open a little bit higher and then seems to drift back, and often those things close lower here. So not so much the case here right now, because we see Alcoa only trading up 16 cents here in the pre-market, which is kind of in line a little bit with the S&P, and Yum is trading up just slightly here as well. But just and obviously, as traders, I always say this: we work in it's just all about probabilities here. So nothing is an absolute. Nothing happens every single time. But I'm saying if you do a trade 100 times, 55, 60% of the time, a lot of times this is what happens. And if you can get an edge, just at the casino, if you can get an edge of 55%, that's a pretty good edge. So, and that's something I will take. So a lot of times, my edge on these trades and my strategies on these trades have been to sell the stock that's spinning it off, just, if it opens a little bit too high on that opening print, and then try to recover it later in the day. So not sure that's going to happen with Yum or Alcoa here today, but that's a trade that has worked for me in the past.
All right, Dennis, with some good advice on trading spinoffs.
Okay, so upgrades, downgrades here. Just want to talk about a few here, and we only got 5 minutes before Nick's going to come on. But Chevron here got upgraded yesterday by Goldman Sachs. Today it is getting upgraded here at Morgan Stanley. So two of your big guns, two of your big brokerage houses here, ganging up and upgrading Chevron here. What are they seeing, Joel? I mean, they got a 4.1% dividend. That's nice and everything, but oil, is not back at $80 or $90 a barrel here. We're still kicking around under $50. What do you think they're seeing that they're upgrading Chevron?
I just I can't figure this one out, Dennis. I really can't. Goldman makes a stake on oil. I will.
What was the Goldman saying on oil?
That if there's not a production cut, that it's going to $40.
Yeah. So okay. So they're getting bearish on oil, but they're bullish on Chevron.
Yeah, I had a hard time.
But they did. Let's give Goldman this. They did get downgrade Exxon too. So maybe it was more of a pair trade. Selling Exxon versus Chevron type of deal.
I'm just going to give you the technicals here, and you got a quick boost up here. I believe this morning off that up to 106.23. We're back here at 105.35. Part of yesterday's range here is 105.46. So if you're going with this upgrade here, you're getting a chance to buy it on a non-gap, without a gap. To me, anything under the close here, 104.75, I think I'd maybe have to let go. But pre-market high is 106.23. Chevron has not been up in this area, wow, quite some time. I'll give you one daily level. Oh, we had a high at 106 on July 22nd, and then the next significant level is closer to 107.
We're still having a few people say they're having trouble getting the feed of the show here. I would say just refresh your page. If you're starting it, sometimes live in the morning, the best thing to do is to refresh the page, and that seems to work better. It's been working fine for me ever since we went to the YouTube live. So let us know, if the show's not working for you here. We'll try to work on it, but I've found it quite a bit better since we moved to YouTube live. Looking here, MasterCard, the stock has just been absolutely incredible. This has been, one of the best investments that I've probably ever made. My average cost base, I think, on MasterCard is around $13, and the thing's at 107 here now. I don't know. I guess it's just an eternal hold here for me. I've held it for about 7 years here now, or actually, I think it's longer than that. I think I bought it back during the financial crisis here, probably 8 or 9 years ago here. Now it's 107.02. Man, this has just been such a mover. Guggenheim is downgrading here this morning. It is trading down just on an odd lot here this morning because of the downgrade there. Kind of an ugly candle yesterday. I mean, you get up to 108.93, and then he closed kind of weak here. I'm a little concerned short term here, but long term, I guess I'm just holding because I've been in it for so long.
Yeah, I mean, you do get a sell-off like that after making an all-time high. That's a reversal, not something you want to see. Trading down, like Dennis said, on an odd lot. The fact you got up to 108.93, now you're trading in the 106 handle. That just makes your resistance, ahead of that level come in. 107.02, that will be the battleground there. That was the close. That was also the all-time closing high. And that was only by 12 cents because your all-time closing high on Friday was 106.90. So long-term number for you, Dennis, 107. And I think, Dennis, I've told you to sell this stock at 70, 80, 90, 100. Now I'm telling you,
I did sell some. I did sell some on the way up. I don't have my entire position, but I think I'm sticking with what I've got left.
Okay.
I'm one, when the stock doubles, often I do take half off the table, then I'm completely playing with the house's money. That's, a Jim Cramer tactic there, and I think it's a good one. Sometimes, when it triples, I take off a little bit more, but this has been one that's just, been an unbelievable performer there for a long time. I heard a ringy-dingy, not sure what the ringy-dingy is all about, but what I will tell you is what I wanted to go into is we only got about 30 seconds here before we got Nick, and we got to take a break. What was the ringy-dingy, first of all, though?
Probably Benzinger Pro.
Yeah, I know, obviously.
Are you going to hold us in suspense?
Spencer, sleeping over there?
Spencer went out again last night, folks.
Gosh, I thought you were asking where it came from.
You got to stop this going out during
the week.
Oh, my God.
On a school night.
I thought you were asking where it came from.
I ask that all the time on this show. The ringy-dingy is the pro, obviously.
I didn't know you know that. All right. Yeah, I'm looking. Hold on one second. We had Gannett report the termination of talks to buy shrunk. That actually is big in my world. I've been following the story for a while. So
Gannett flying on this. GCI trading up 9% here right now on this news, and TRNC, which is the silliest name they've ever come up with, I think. TRNC is trading down now 15% here in the pre-market 10.25. It's offered at
It's offered at so and so. Let's take a look at TRNC and then we'll take a break. Or did I stop this? Nope. Let's just take a look at TRNC real quick.
ugly 3 days ago, and it went from 16. I guess that was the rumors, and it's selling on news here too. It's sell on rumors, sell on news with TRNC. It looks like.
Hey, Dennis, real quick. Elizabeth D saying, why not sell some calls on that MA position?
Because I get called away on the stock. That is one consideration there. And I learned that the hard way. So this is, and okay, so Nick, we'll keep you on an extra 2 minutes here. I know Nick's
Can
listening
you
to us
dial
anyways.
Nick in?
We'll keep you on an extra 2 minutes, or bring me in here live. But I want to make a point here. This is something that I learned the hard way during the financial crisis. And I
Good
bought
morning.
so many stocks. Nick, I just want to finish a point here. And
Yeah.
I want to get your thoughts here on this as well, because you're our options guy. So this is a good thing to have you on here with too. Nick Shaheen just joined us here from his. Well, Joel, you're supposed to do the introduction. Introduce Nick, and then I'm going to explain the point.
He doesn't need an introduction. Go ahead, Dennis. You're
Introduction.
fired up,
Nick,
Dennis.
what if we have a new listener? They don't know who Nick Shaheen is.
Nick
I'm
Shaheen
good.
is-
Go with
he-
your point. Go with your point.
Okay. Create income with option spreads. I did the introduction for you there, Nick. Anyways, okay, so covered call writing is a nice way to generate money from your portfolio. But the one consideration that, and I had happen to me during the financial crisis is I bought a lot of stocks on the cheap. I was buying, I can remember, like eBay back when it was like $10 and, buying all these other companies. That was before it did the spinoff and everything. And, I was selling upright calls on the things. So, I bought eBay, I think at $10 or $11. And I was like, okay, well, I'm going to sell the 15 a couple months out because I was getting $1 for it. And I was like, but what happened was those prices were so depressed back then that they started running and running and running. And I got called away on like half of my investment portfolio because everything just ran so much at the back half of 2009. And I learned that the hard way. And I was like, well, look, let's stop and analyze this here. There's a time and a place for covered call writing. And when you're coming in here and you're buying stocks during the credit crisis there, it's not that great to write covered calls on because I'm taking a lot of risk because we didn't know some of these companies might go under. Yet I'm limiting my upside. And, that was the downside, with writing the covered calls is sure, okay, you're saying I'm going to sell it there if it gets there anyways. But the difference is, is once you're writing the covered call against it, you're probably going to hold the stock a little bit more too, maybe than you would because you've got the call written out against it. And that's why, when I got called away on all of my stocks, half of my investment portfolio, I kind of got it left back with a bad taste that, I would have loved to have some of these stocks still too. So I think there's a time and a place for covered call writing. What are your thoughts on this, Nick?
Yeah, definitely. And it all depends on where you entered the stock. And we'll start with this. I was planning on having a little segment there. I always say, if you follow me on Twitter or StockTwits, I always say, know your levels. And that's exactly the right thing you need to do in order to do the right. You can't write calls, covered calls on something you're underwater with. And because if you get called away, then you have tax implications and all that kind of stuff. So they're perfect for sometimes, but you have to know your levels. And if it makes sense for one situation, then it doesn't make sense for another. But there are other ways to mitigate that risk, especially in stocks that have kind of funky options. Because if you go and write way out of the money, way out in time, then you can buy a shorter one to cover you for pennies. So if you collect $1 and you spend the 10 cents or 15 cents to buy a shorter dated call in case you have that snapback, then you kind of cover your back somehow. But I don't like writing covered calls just because I don't hold stocks anymore,
Right.
and I play all the options. Yeah, but you definitely need to know your levels. Otherwise, if you're not willing to let go of that stock and forego a few bucks upside, I'm never upset about booking profits. So if I'm in a situation where, okay, writing the call and getting me out at X is profit, but then I miss out from X until X plus $2, I don't worry about it much.
It's all about your levels here too. I just want to expand on that point here, Nick, and give an example because I had Walmart in my investment portfolio forever around $50, and I would buy it at 50 and I'd rate the 55. I buy it. This is back in 2009, 2010, 2011, and you can see here it just kept bouncing between 50 and 55, and it was working awesome for me because I'd buy it at 50. I'd get an extra buck or two, rating 6 months out at the 55s, and I get called away. So I took in that, and then I'm selling the stock 55, and then it come back to 50, I'd rebuy the stock, and I do the same thing, and I write the 55. I did it, I think, 3 or 4 times, so it worked out really well until the stock eventually took off, called away, and I never got it back again. And that's why I joked back in 2015. I was like, if it ever gets back to that $50 level, Walmart, I'm going to
Yeah.
buy it again, because that strategy was working for me before. So knowing those levels, though, and knowing, that 50 is where it was bouncing all those times, it made me more comfortable to buy the stock and write the upright calls. But when you get these stocks going straight up or straight down, it's so hard to, pick a point, where you're going to rate a call, because, the levels, aren't as clearly defined, at least from a support resistance standpoint.
Yeah, I wouldn't want to risk it if I needed to hang on to the stock for whatever reason, either tax reasons or if I'm underwater, especially. So you have to really pick and choose when you write covered calls. They're a great point. When remember when Apple wasn't paying dividends, everybody was crying about it.
Yeah.
And I was like pounding the table. You can create your own dividend in Apple. It was so easy at the time. And it's still kind of easy. You can boost your stock, especially if you don't mind selling it at 120 or 119. It's like, who cares? I'll sell it and I'll rebuy it if I want to. So it's not a big deal if you get called away unless you have a particular situation.
Bobby Bid here in the chat, Nick, just wants to clarify a little bit further. You were talking about, a strategy, maybe selling up further up call longer term and buying a short term call. How would you, figure out, that, the delta with buying that out of the money call?
Yeah, it's just a matter of you have to look at each individual ticker. Some stocks don't allow for that, but others, they don't carry a lot of premium. So buying a shorter dated call is like literally pennies. And those are the same stock that force you to go way out in time to get any premium when you're selling. And so it's particular to each ticker. So if Bobby wants to send me an email and discuss one particular situation, we can do that instead of me just generalizing. But the idea is there. I do it backwards on the puts too. If I wanted to sell puts under a stock, for example, and I sell, say, Google at 500, 2 years down the line, I can buy to cover the oh crap moment if it crashes, shorter dated ones just to kind of give me cover for some time.
Nick, you just posted a chart in the chat on GIS. It's a stock that we were talking about just a few minutes ago here. Give us your thoughts here, from an option standpoint on how you'd set up a trade in GIS.
I would look at the premiums. I don't have the premiums in front of me, and see if, first of all, look at the levels. And this is a level where I would probably dare, if there's nothing too major as far as changes in the fundamentals. Technically speaking, I would have ventured when it came down towards 60. I would have ventured into it. But where it was before, close to that white line that I had, which was like what 65-ish. I would not have jumped into it to sell puts below it. I would have played it lottery ticket. And I think my comment was just before the last earnings. And so here I would do a credit put spread if it's available. And then again, I would choose levels where it would still give me yield. And you have to choose what kind of yield you want. I'm not too greedy with the yield. 8 to 15% usually on any trade is plenty. Or you can step in right at the money and sell the puts, and it's basically a coin flip. So people tell me, here's a credit put spread, which is a bullish trade. When you sell a put and then buy a put lower, you want the stock to stay above that spread, right? So, and if somebody says, okay, I'm going to sell at General Mills a credit put spread, and it pays 50 cents, and the width is $1, I'm just making it up. I don't even need a chart to tell you that you're just gambling, because why would anyone pay you half of your potential profits right up front unless you have half a chance of winning? So it's a 50-50. That's the definition of gambling. It's a coin flip. So I wouldn't collect the 50 cents. I would go towards the 20 or lower in order to put myself in the close to that 2 standard deviations away where almost nothing happens. Everything happens within 1 standard deviation, right? The 68, whatever it is. So you want to step further out to sell the spread or the risk. And that's what I would do here. I would figure out how far can I stay away yet still get my yield.
And a great point Bobby Bid bringing up here in the chat is something that you said on our show multiple times. When Apple was trading down at $90, you were selling 70 puts here on this thing. And,
yeah.
You saw the value there down there with the stock, and you've been rewarded here. And Bobby Bid was trading this along with you. So, he made a little bit of money off of your calls here on our show as well here, selling puts on Apple down in the 70s.
And even it didn't need to be puts. I mean, I sold 70.65 next year's March, and somebody paid me $1 for it, I think. I can't remember off the top of my head.
Really?
Yeah.
So basically, they're saying that there's at least a 20% chance that Apple goes to $65.
Yeah, and
That's if you're taking that bet, that's the other side. What you're basically saying, there's a 20% chance that Apple goes $65. That seems crazy to me when the thing's got $40 in cash.
Yeah, and the thing is, I collected more than 25% reward because I risked it.
Wow.
Basically, I collected $1 and my maximum risk was $4. It was $5 wide spread. I'd do that all day, given the
Yeah.
current circumstances, right?
Yeah.
Anything could happen, but it was an easy bet for me. But the way I would play any long game here is I would have to first find my level, and then set up a trade if it's possible. Sometimes it isn't possible. I don't push my trade in order to fit a parameter that is available. I want to stick to my own parameters, and each person has their own parameters. Some people are comfortable setting trades just below current price or just above current price. I'm not that guy. I'd give me a set of circumstances. I'd like to plan around it and just set up a boring trade. That's what I want to do. Like with all the news around Tesla, I managed to find a boring trade in Tesla, which was an iron condor in the mid 150s and I think in the mid 200s. So it still works fine. Which brings me, Tesla. We spoke about last week, I think. How things are looking a little bit different, and Tesla and Google this earnings season represented to me the ultimate. Oh my gosh, Tesla delivered a profit. I mean, why the next day turned red during the day on the earnings for a little bit. It closed up 0.8, but it left what 5 point run up. And if it can't rally on a surprise that was so positive, then there's something wrong with that setup there. Either with the whole investment thesis in general because markets are so fragile, or in particularly in Tesla, or a combination of both. But then the same thing happened to Google. They delivered a really pretty quarter, and here they are.
You're listening to Benzinga's Pre-Market Prep with your hosts Dick Shaheen and Dennis Dick. And I will throw in a quick question here. Define standard deviation. It's kind of a simple term, Nick, but Larry Glickman would like your definition of it.
Well, it's the way instead of com- um, making it more complicated as far as people try to throw in um, terms, okay, plus or minus this. For me, it's very easy. I'm going to define it in plain, simple English. If when I'm selling, that's what I do. I sell risk wherever I think price is not going, right? So it's the same concept as selling insurance to somebody who drives in downtown New York City or somebody who drives in a desert where there are like three people living. So stay away from wherever everything happens. You've heard of a bell curve, and you can draw like a bell-shaped curve. Everything happens right at the center of the curve where it's highest. The further out you go, you have one line that defines one standard deviation. They have another line that defines two, and that puts you up in the 90% chance that something is not going to happen. So only like 8%, 5 to 8% happens in those outskirts, in the desert. Stay away from New York City drivers and go out there and sell insurance to the people in the desert, which is when you step out on that bell curve. So you can look it up on Google. They'll show you a bell curve. They'll give you all the formulas. But to me, it's very easy. Step out to where you have a theoretical chance of success when you sell spreads that is 90% or more. Then I'm okay with that. If I can still get my yield, I'm not going to collect 1% for selling risk anywhere. But if I can get 8%, 10%, 15, if I'm maybe even 20 or 30, if I'm doing an iron condor, it depends on the time frame and all of that. But that still leaves me an 85 to 95 chance of success from the get-go. That's what I like to do.
Do you look to sell a certain delta, 7 or 16, or do you pay attention?
That coincides with about a 10 delta, air math, so to speak. When it gets to 30, then I start worrying because that's about, 68 to 72% chance of success. Too close to 50. 50 is unacceptable. That's a coin flip. That's gambling. That's Vegas. Black, red. So further away from 50 is great. So 10 is is a good starting point. A lot of people use it. And it's very easy as long as you can set up a trade that actually fits your parameters, meaning it delivers the yield you want on the money you're risking. And it's very easy to do that, to figure out what works for you and stick with it. Rinse and repeat until it breaks.
So you're from Larry here. So you're looking for areas out of congestion.
Yes, I want to be where nobody else wants to be because I want the trade to be boring. I'll give you an example. Yesterday, I sent out a note. In June, I sent out an iron condor on the RUT, which is the small caps, and I did a sister trade on it for the IWM, which is also the small caps, only the ETF versus the index. And I sold credit call spreads, which is a bearish trade at 1310, 1320 level, and collected over $1 there, and collected over $1 for selling under 1,000 iron condor. So I shorted and I went long the market, the small caps over 1,300 and below 1,000, collected over $2 on a $10 wide trade. I think it was 250, but regardless, that was the kind of trades I like, kind of boring, where I know I'm very confident that both sides should survive. So those are the kind of trades that I like. I step out of trouble, sell risk where price is not going per my opinion, and then see time do the job for you.
Quick question for everybody out here in the chat, and everyone that's signed in, I would like you to answer just with a yes or no. Do you enjoy this kind of content? Do you enjoy this conversation, looking at the options market, different strategies? Everyone could just chime in here because Nick's kind enough to come out to our event here in November 12th and 13th. He's going to be discussing these kind of option strategies and much, much more. So a lot of good content here, folks. And Nick's going to be in person. He's going to be answering your questions. He'll have some illustrations, some charts. So from the people that signed up here so far, I just have not seen a lot of people from our chat. So folks, get in here. This is great information. You're not really going to be able to learn it. You can learn it from other places, but learning it in person from an expert. Dennis, you got anything else you want to add?
Just want to say there's a couple other questions from the chat here, and everybody's loving your stuff here from the chat. You got like 7, 8 people just jumping right away here saying they love this stuff here, Nick. So, we love having you on here because me and Joel talk the equities a lot, and it's nice to have, somebody come in here and talk the options, especially with the expertise that you have here, Nick. Valentina was asking, what return on capital do you look to make on each option trade? I know you've talked about this on the show before, but maybe, you can just enlighten us here again.
I'll give a simple one. I'll give you a couple examples. On a $5 spread, I'm probably looking for about 50 cents on each side. So if I do an iron condor, it's about $1 wide. So when you do one side, 50 cents, what's air math was that 8% yield on money at risk because you're risking 450. It doesn't sound like a lot. Oh my gosh, you're risking 450. Yeah, but I'm collecting 8%. And if it's a 1 week trade, I mean, that's pretty dang good week after week. Or if you do both sides, then suddenly you're in the 15% range. On a $1 wide spread, I look for about 15 cents, maybe even 12 if it's a set it and forget it and let it expire worthless. So the yield is high if you manage it correctly. The dollars, when you say, okay, I'm collecting 12 cents on a $1 wide, you're collecting 12 cents? That sounds stupid. Well, do it 30 weeks out of 52, and you will find yourself clobbering the markets if you can do it successfully, especially if you do an iron condor, because it's 12 cents on each side. So suddenly you're collecting 25, sometimes 28. Last week, I did over 30 cents on Facebook in an iron condor. So I do publish 8 of those a week. I skipped 2 last week, Google and Apple. I'm skipping Facebook this week because of earnings.
All right, Nick, we were
actually, Joel, just before we let you go, great question from the chat. Valentina's reading my mind here because she's just saying, what happens when you get in trouble? I want to ask you this here too. Just talking about, you were talking about, even standard deviation, looking where everything happens. Well, the odd time in the markets, you can get those fat tails. You can get those events that actually do happen that only happen, 1% of the time or less here. What do you do in those events? Flash crash happens, for instance. What do you do in those events, and how do you, minimize your risk during those events?
Uh, Flash crash, hardly anything will survive that. You just step off, push back from your. If it's a flash crash, it will fix itself.
What about a
It
crash?
Okay, a crash. That's why you're better off than somebody who's holding a portfolio of stocks because every time I go to bed, I know exactly how much I'm making and how much I'm maximum losing if everything goes to zero or a million. And that lets me sleep well at night. So you put risk, I always say, only risk money you can afford to lose. So as long as I can survive it and live to fight another day, I'm totally okay with that. I wish it doesn't happen, but if it does happen, you should be able to survive it. Now, as far as action, you set your own limit where it's not. I already answered that by saying 70% is unacceptable for me. So I start defending. So, for example, I had a credit put spread that came under pressure a little bit on Friday. I bought a small debit put spread a little bit higher. So on Monday, if it continued falling, I stopped the bleeding. Then I can act on it. I'll close it for a small loss rather than a complete blowout. I never sit back and hope it works out my way.
All right, Nick, you're getting a lot of options love here. You should be on options actions on CNBC. So, Nick,
He likes our show better, though.
I've trashed him too much.
He likes our show better.
all right, Nick, we'll let you go grind out some profits there, and we'll be speaking to you again soon. Thanks a lot, Nick. We kept you on for a long time, but
No
I
problem.
think everyone really enjoyed it.
Great show. Thanks.
All right,
You know what? I just want to make one more point on Nick, and this is why, I love his strategies here is because he doesn't leave himself open-ended. And that is how he really does protect himself against those crashes there, is that, when he's writing that put on Apple at $75, he's buying a lower put at 70 because he's minimizing his risk. Then you will see a lot of people come out and just do the one side of put because they think it's never going to go there. But during that crash event, those people get wiped out. Nick doesn't because he's actually buying the lower option to protect himself. So that is the key, and that's why I love his strategies is because he doesn't leave himself open-ended.
All right, Dennis. Before we go, Elsinger in the chat here, says San Francisco, San Diego, Hawaii. I'll be there regarding our event, but we're trying to get this up on the site and the link here, just the agenda here, some of the stuff that you're going to be missing if you don't come out. We got the tape reading. Of course, we have featuring Nick on Saturday. Also, Anne-Marie Band, who's also one of our favorite guests to have the show, is going to be giving her take on technical analysis. On Sunday, more trading strategies. And also, we're lucky enough to get Jeremy Newsom coming in, who's active day trader, swing trader, and also a long-term trader. And I tell you, this guy has more personality than me and you put together, Dennis.
Oh yeah, Jeremy's great personality.
Yes.
We've had him on the show here a few times, so we're excited to have him out there too. People are saying, why are you doing this in Detroit? Well, Benzinga headquarters is here, so we're here locally. So obviously, we know a lot of people may not fly into Detroit for the event. Maybe they will though too. If you really care about your trading education, who cares where you fly into? I mean, it's not like we're in blizzards here in November in Detroit. Sure, there's other months, that maybe Detroit is nicer, but Detroit's just a nice city that's coming back. There's a lot of bad things, that people say about Detroit out there. I see it all the time. Detroit has turned itself around. Downtown Detroit is a beautiful city here. So, we're on the comeback trail in Detroit. So if you've never been out here, it's really nice. But I mean, who cares if you're getting trading education? Who cares about the venue? It's all just about, learning and about investing into your trading career because, when you're looking at it, if you're looking at doing this, as a living, or even if you're doing this as, more than a hobby, it's something, you got to invest in yourself and you have to spend money and learn. And I mean, when you get people like Nick coming out, talking options, these guys are the experts. This is a person that makes his money, just selling options here. And he's done it for years like that. Myself, I've been a trader. This is how I've made my living for 17 years as a professional trader. So we're going to be sharing our trading tactics. We're not just talking heads, that have other businesses here and doing this on the side. This is all I do all day is trade. So, besides radio show, that's why I leave the radio show at 9 a.m. every day because I need to go trade because that's how I make my living here. We're sharing our trading tactics with you, and the reason we're doing it is locally here. So obviously, when we do an event, somewhere else, it's probably going to have to be for more money because we're going to have more expenses there. So you're not going to get in here for $250. If we do an event in Chicago or LA or Las Vegas, it'd be a lot more expenses with us. We got to, rent, halls. We got to do a lot more there. So you're talking in the thousands of dollars when we do a remote event. We might do that eventually, but you're never going to get that remote event for us for $250.
And Dennis just guaranteed a snowstorm in Detroit in the second week of November.
I was going to say, Dennis, it's first of all,
there's no such thing as jinx.
It's supposed to be 70 degrees today, so I don't know what you're talking about about the good blizzard.
70 degrees in Detroit here, so we're good to go. It's 2 weeks away. If you're local here, if you're local to the in Michigan and there, this is an event where I'm going to tell you right now, you're never going to get the value for $250. I'm not tooting my own horn here, but it's I'm going to be giving away a lot of good stuff there that I don't talk about on the show as well. So lots of things, and obviously Nick and Anne Marie and Jeremy Newsom coming in here as well. So if you're local, I don't know why you wouldn't be there.
All right, Spencer, 9:00. You want to wrap things up?
Yep. If you missed any part of our show today, you can catch our podcast or actually the show as it aired is on YouTube live, but I edit out the breaks on our podcast. That's on iTunes, SoundCloud, and Stitcher. Just search for Benzinga or PreMarket, or again go to the Benzinga TV YouTube page. Don't forget to check out Benzinga Pro. It's Benzinga's real-time news platform for a free 2-week trial. You can go to pro.benzinga.com. You can also call us at 313-723-2000. And then if you say you listen to the show, there is a discount involved on an annual subscription, I believe. But again, free 2-week trial, pro.benzinga.com. On tomorrow's show, we got Rocky Horner and Tommy Lockey. I will not be here, so Joel and Dennis will be running the show. Joel will be running the show, I should say. I'll be available, Joel, to help you out in case of an emergency. So looking forward to no problems tomorrow. Knock on wood. But
another jinx. This is
give me a break. All right. The last thing, please always remember that all the information, material, and content from our show is for informational purposes only, and not meant to be investing advice. All right. That's it for us today. Hope everybody has a good rest of their day, and we'll see you guys tomorrow.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.